Hello, hello, and welcome to a new episode from the Markets Middleman. We've had a really amazing week last week in terms of price action and the delivery, and it was really there was actually few obvious setups that some of them we mentioned in the previous forecast, and some of them, of course, was updated throughout the midweek based on how the market worked. So, moving forward, I was really impressed with I wasn't surprised, but impressed with the DXY's delivery, especially that last week was able to not only close above a macro weekly breaker, but also to maintain the closing price of the week above this high over here, which was the high of November. Why does the closing basis matters a lot? Because really, the closing basis tells you a lot, tells you whether the market had broken the structure to the upside, has the tendency to push lower. Look at here, for example. Price couldn't close the week below this sell side. This is why we saw a reversal. Also notice over here, price couldn't close above this buy side. Notice how we saw a continuation, or also, sorry, a reversal to the downside. But right now, after price struggled a lot of times to close above this buy side, we've seen this close aggressively up. And if I look to the upside, is there a reason for price to go higher? Yes, it is this buy side over here on the weekly time frame, and it's also a monthly fair value gap. So it would really depend on how the March would close. But so far, I think that the US dollar is ready to retrace, at least either retrace from this major push to the downside and retrace at least half of it, or maybe we are witnessing the end of this push to the downside, and market usually before making a strong move it accumulates, and it's been accumulating since May, so almost 1 year of a relatively sideways price action from the DXY. So are we ready now to just push higher? Maybe, no one knows. This is why I trade those markets step by step, level by level, week by week, because every week is filling the narrative step by step. So, without any further ado, since I'm obviously still bullish for this week from the DXY, and also notice that we have the Fed interest rate this week, which is really important. It's going to be on Wednesday, March 18. And I think that it's going to be positive to the USD first because technically it supports the idea of a continuation to the upside. And in this case, yes, you can wait for the full displacement above this buy side. I'm with you. But your job as a trader is to anticipate the potential next move. So if I have some indications from the DXY, EU, GU, maybe AUD also, indications that yes, we already confirmed a huge structure shift on the weekly time frame, then yes, my job as a trader is to front run and position myself before this breakout happens, because once this breakout happens, big money is already made and objective is already done, unless of course good setups are going to emerge and they retrace, etc. But I mean, for this specific narrative, internal range to external range, this is what I have right now. So I trade what's in front of me instead of what could happen in the future. So what is in front of me is the following: internal range, which is the weekly breaker block, which I will um, hint on more information on the daily time frame into last week's high, or maybe also the extension of this wave, which we will see on the daily time frame. So what is this area on the daily? This area on the daily time frame is the following. So also notes on the day, obviously Friday closing well above. Interestingly, this week actually opened with a gap lower instead of a gap higher. I think everyone was still leveraged in, anticipating a gap higher, but yeah, the market would always punish those who are in rush and rewards those who are impatient. So, moving forward, I have the first point of interest as the daily fair value gap. At the 50% range comes the weekly breaker block, which is also a daily breaker block. if you go a little bit down and if you look here, okay, you will see the last unmitigated daily fair value gap aligning with a beautiful liquidity over here, and it is the 61 Fibo level. In other words, even though I see the DXY pushing that low, maybe right at the interest rate, actually everything before this daily fair value gap, I would need to see a market structure shift on the hourly time frame, anywhere between here. But if I see price testing this daily fair value gap, I'm gonna be aggressively buying the DXY. And guys, I've already mentioned this in the description. There's a huge disclaimer that all of this is not a financial advice. All of this is just my opinion, and I'm sharing this for educational purposes only. So if I say that I'm gonna be strongly buying over this area or over that area, that doesn't mean that you should be doing the same. But my intention of sharing those forecasts is for me to reflect on myself after some time, and throughout the way also maybe offer you some insight or some perspective that you can actually see the markets through this lens, because this actually changed the way I trade for years and years. So anyway, moving forward, all of those levels I want to see a confirmation, okay, and I want to be convinced that price is going to go up. Why? Because there's a very important liquidity that market could actually manipulate that low and still pushing to the upside. So this is the actual narrative for the DXY. Remember last forecast when I said that I want a mitigation of this daily fair value gap and then push to the upside? It did not happen. And how we were able to adapt to the market conditions and still be able to either long the DXY or short GU, whatever. It's the following. Since price already reached very close to the daily fair value gap, instead of mitigating it and push to the upside, it's just simply push to the upside. So over here, maybe probably you were a little bit uncertain because this is also a breaker. What if market keeps on going down? It was a little bit not so sure that price could go higher from here. Unless you take a further confirmation from lower time frames over here, that's fine. From my view, I've seen that maybe we could see one more push lower, and this would be like a minor retracement before we continue pushing higher. But we stayed patient and we let price told us what to do, and soon after we saw that the market is not respecting not any single bearish area of interest and instead displays to the upside and continued. So same thing I'm expecting here. Let's say we saw price reaching the daily fair value gap but not really making any displacement lower, and we reached Wednesday, and Wednesday was a manipulation. Yes, now things are making sense because it already created a breaker. If I'm gonna be buying over here, I want to see that this buying caused within a displacement. If you haven't bought over here, that's still fine because you want to make sure that you just want to see a break of structure. You just want to see a breaker that got broken to the upside. Just like you saw over here, over here, over here as well. So price, if you are really patient, price is going to give you several opportunities for you to join the trend. So it really depends on your approach in this case. So here you can be positioned in, protecting your stop loss within the slow or the lower boundary of the daily fair value gap, and once price made the displacement to the upside, this could be your next actual position, protecting your stop loss with the break even. Maybe you can set your first trade on break even and then open another trade targeting the daily draw on and the 27 Fibo extension from this past wave. So you can really approach the price or the narrative within a few different ways. Now I'm definitely not in a hurry to buy the DXY simply because of the market open, gapped lower, left this huge fair value gap, closed above this breaker. So I think there's going to be some consolidation going into the Fed interest rate, and on the Fed interest rate we're going to see price rotating up, of course, either from here or from here or from the even from the weekly breaker block. Let me bring this to the zone. So with that being said, on the DXY, let's jump into the EU and GU. I'm also preparing something on the AUD, and let's see what we have over there. Now, really, before I say anything about the weekly chart on EU, I want you to pause this video and look at price action itself and try to understand what is it really telling you. So I'm trying to give you some time to pause the video, but whatever. Um, it's really interesting how price told us or gave us some hints before we see the last weekly close. But this actual week really closed below a major level on the weekly time frame. When we're talking about the daily and the weekly and the monthly time frame, we're talking about institutional levels. We're talking about macro trends that was shifted. So in my humble experience, I think that this weekly close had already broken the structure to the downside. So notice how EU was trending higher ever since 2025. Then it went into some consolidation. We had a little bit of mixed bias over here, but then it was pretty like obvious that the price is heavily bearish. So we just mitigated the weekly fair value gap, daily fair value gap. We already swept those buy sides, couldn't close above it. Again, why closing basis is very important. And right now we just closed below the weekly breaker block. So this is the last high price made before actually pushing lower. So it's really significant. I don't think price could go higher to mitigate this weekly fair value gap, because once we have a critical weekly level like this weekly fair value gap could be mitigated, but it's a very low probability. Maybe later on it will come to play out something. But for now, I'm not focusing on the weekly fair value gap as much as I'm focusing on the weekly breaker block. So we've confirmed a break of structure. Again, not only closing below the breaker, closing also below this sell side. We have another sell side not tapped, so we still have a push or clear draw on liquidity to the downside. Moving into the daily time frame. So I wanted to see a mitigation of this daily fair value gap last week, but we couldn't see it. In fact, price created another daily fair value gap, mitigated this, and then started making a very nice structure on the hourly time frame. I will show you in a while. But before I move ahead, I've set on my chart this daily breaker block over here, and I like this daily candle because it was created on Monday last week, gapped lower, and then created a very nice range. It aligns also within 50% of this daily fair value gap, and this is the weekly breaker. So my plan is simple, no need to repeat myself. I'll either gonna be at the weekly breaker block, it's also a daily fair value gap. So really there is a nice possibility that price, maybe on Wednesday, because Wednesday usually is the manipulation day, we could actually mitigate all of the fair value gaps within this leg to the downside and still continue sharply to the downside, continuing the overall trend, or at least just to test the last previous sell side. And if you are confused what level you should wait for, just simply take an example of the recent breaker blocks that we had. So again, price created the daily fair value gap, created the buy side within the daily fair value gap on Tuesday, which was London's high. During a PM session, price raided the buy side, all of this happening and occurring within the daily fair value gap, and then closed below the 2-hour breaker. Again, if you weren't so sure of the market structure shift within this range, same as what happened on the DXY, price gave you a hint that it closed below this sell side over here. So not only closed below a breaker, but also closed below a minor sell side, which confirms that the break of structure was already done. So this was your first initial execution. Then this was on the 4-hour time frame. If you weren't so sure of this, that it was really displacement, then you could be waiting for this 4-hour candle to close. So in this manner, we're talking about price created a low, then displaced below this low, retraced back into a breaker, and then full delivery into the sell side. So also by the time DXY fully confirmed that it's bullish, notice also one more time how price retraced back into a 1 hour breaker or liquidity or order block and then pushed extremely downside. So this really makes your job as a trader really simple. So you have an order block, you have a daily fair value gap, you have a weekly breaker, whatever you have, okay, you just set in your plan. So for example, my plan, if I see price rotating that higher on the weekly breaker, I'm gonna be aggressively selling. That's it. I'm gonna be selling aggressively, of course, reasonably aggressive, not just like blindly selling. No, but I need to see if certain structure, and I would like to see some consolidation before me shorting from anywhere because I want to make sure that an accumulation took place and this push to the upside is more likely a manipulation. So if I see, let's take this for a second. If I see price creating a low on Tuesday maybe and displacing sharply below this low, then yes, here I'm convinced that price no longer wants to go to the weekly breaker. It already told me, it already spoke to me, price already hinted for me. Just like over here, there is a daily fair value gap over here, but price hinted and told me first time and told me second time that I don't want to go to that daily. That's fine. That's fine. We can mitigate it maybe a year from now, but right now, I don't want to mitigate it. So if I see something like this coming from a daily breaker, then yes, I would trust the fact that price is already shifted in market structure, and I would continue going bearish, just like what we've seen from previous price action and what we were been saying for a long time. Which I'll dedicate one update just to talk about breakers, but this will be a little bit later, not now. So this is the objective from EU, just to get back to the bigger picture and show you what I mean by this. So my point of interest, one, that I will be cautious on and I would need a confirmation is the daily breaker, and my other point of interest is the daily fair value gap plus a weekly breaker block. So those are the point of interest, and if you take a feeble level, of course we will see something like the 61 or the 50 feeble level lies between over those two areas over here. So with that being said, let's jump into GU. I don't want to take much of your time. So on GU, there's something also very similar that happened. We've already closed below a very important weekly breaker, but notice how GU is already approaching the weekly breaker, and it doesn't make sense for me to short GU right now. So it's still early. I want to see how Monday will close. I have a daily fair value gap over here and a 61 feeble level. It's really very simple for GU. I'm gonna keep it that simple. It's just a daily fair value gap within a 61 feeble level. And GU did offered us a significant trade last week. And if you remember, or if you haven't watched the previous forecast, please do watch it. And I highlighted this level, and I've given all of the reasons why this level is important. I just thought maybe we would potentially manipulate a little bit higher by the time the XY reaches the daily fair value gap, but once I realized that the DXY no longer wants to mitigate the daily, then I've noticed that this level was pretty enough for GU. So the trade was really simple on the 6 hour time frame. All of this was consolidation. If it wasn't so clear to you, all of this was consolidation. Just simply price created a low and then displacement below this low created this 6 hour breaker block over here within this liquidity. So it's just a 101 reversal trade where price makes a high, displace below it, and then retrace back into it. So we were able to capture some shorts on the high of Thursday's New York session, and me personally, I've got out at just before London session in a bit. Of course, I went out a little bit earlier than my plan, but it was due to Friday, and I had some targets I've set into my accounts that, based on my money management rules, I had to get out. But some of the members were able to catch all of this move until the full TP, and I'm really proud of that. It was really great trade that happens almost every week, and if you are really paying attention to what price is showing us, we can capitalize on such opportunities almost every week, or at least in a week once, or one or two clear setups like this one emerges. So all in all, this is the daily fair value gap. Again, price is respecting the concept of the breaker so much, either a displacement from here, or maybe this could be on the lower time frame, so I can start scaling in as an average entry around those levels, maybe protect my stop loss above this high, and of course obviously targeting this sell side or the weekly low. Last but not least is the AUD. Now you already know that I don't trade AUD as I trade the EU and GU, but sometimes I do actually look into the AUD, and especially at such times. So what AUD is telling me that price already swept a major buy side, which was 2023 high. Okay, it created the buy side before and then manipulated. It swept the two relative buy sides, the major buy side from January 23, and then on the daily time frame it created a daily BPR. So if you don't know what a daily BPR is, it's the alignment between a bearish fair value gap and a previous bullish fair value gap. So this is an inverse fair value gap with a fresh bearish fair value gap. And if you watched a little bit of my videos, you understand very well the importance of the daily BPR. So after price swept this buy side, yes, I don't see a breaker. Yes, I don't see like EU and GU a full break of structure. But if I see a full raid into the buy side and then a BPR was created, then this actually can substitute a break of structure. So then the break of structure could be on the lower time frame, for example. So notice something over here. Notice how price swept this buy side. This was a 2-hour breaker. After this close over here, price never swept this high again. So this candle close on the 2-hour time frame confirmed a break of structure, and there was nothing to support price other than those two relative equal sell sides. So if I look right now, I see that price did not reach the sell side yet. So is there a draw on? Yes, as well as the last weekly low. So there's really big liquidity over here that needs to be grabbed within this whole range from AUD. Okay, what about the continuation point of interest? I have the daily BPR that starts from here, approximately over this area, but within this daily BPR, I see the 2-hour fair value gap, I see a 61 Fibo level, and I see one more thing that is really significant and very important, which is the 1-hour last, or the only 1-hour unmitigated fair value gap. So since AUD is a little bit stronger than EU and GU and had been trending lower for a long time, for example, the Euro AUD had been trending lower since a year, thus why AUD was able to actually still push higher. And I use AUD as a correlation. So in this case, the idea behind this trade on AUD was that EU and GU already went down big time, and it was just a matter of time where AUD would follow those two pairs. So this is the correlation between those three assets, which is really significant, and at some time it can really offer a great opportunity, such as the last one we had within last week. So moving forward within this daily BPR that I think starts from here, ends over here, whatever, I want to see either a break of structure without testing this level. So then yes, I agree that price no longer needs to go up. But at the same time, if I see that price tested this level but still manipulated higher and from here pushed down, broken the structure to the downside, then yes, definitely I'll be so open to start positioning myself at this 1 hour fair value gap, protect myself at this high over here, and of course, obviously, I'll be targeting this low over here in addition to those two sell sides down. So this is really very nice area of interest. So it's a daily BPR, it's a 1 hour fair value gap laying between a daily BPR, which is really significant for price and the algorithm in general, as well as the 61 Fibo level, which I forgot to mention it. So this level over here on the AUD, I think we're gonna have a break of structure to the downside and then a continuation until we raid not only those two sell sides but also those sell sides over here that had already created the monthly fair value gap, which could be amazing trade moving forward. So update your levels and keep this setup on your radar. Last but not least, and I think gold is so worth to mention in my forecast for this week as well, and it's for the significance of this daily BPR. So I just spoke about the BPR once on GU, and the next time I think I spoke on a BPR was on gold, and right now we're talking about it on the AUD. So this was the daily BPR that we were expecting gold to rotate lower, and this was the 1 hour fair value gap that was the high of previous week. So notice something, notice what happened on gold after reaching the 1 hour fair value gap. So this was the 1 hour and 50% within the daily BPR, and after price reached this level, notice how it also created a BPR on the 1 hour time frame. So this was the first position, this was the second position or potential position that you could have been in, and on the 2 hour time frame, notice also the power of breaker blocks. Notice how after this candle closed below the closing basis, below the body of this candle, notice how it never broken above it, protecting those highs over here, and also one more test on Thursday just to show how this level is significantly important. So this was the high of Thursday, and we've seen this sell-off to the downside targeting this sell side over here. So right now I'll call this a BOS, a break of structure. Why? Because I've seen 2 or 3 or more candles closing below this sell side. This hints that a more continuation to the downside was already or is very possible. So as a point of interest, I've set this daily fair value gap, but I will be very open-minded if I don't see price trading that high, even though it's very important. It's a combination between a daily order block and a daily fair value gap and a 61 Fibo level. And since we are in a correction phase, it's really possible for gold to manipulate higher, but then I think it will continue its push to the downside. So just one thing I would give an exception for is the 12-hour order block. So in other words, if I see price trading around this 12-hour order block and gave me a nice significant break of structure to the downside, then I'll be considering shorting without or regardless of price testing the daily fair value gap. But for gold specifically, and again, since we are in a correction, and I think this was the last displacement to the downside, creating a new low, I think if we see like a nice push to the upside and a full manipulation to all those highs over here, tapping into the daily, I think this would be really significant moving forward to see gold trading around 5,130-ish, something like this around this level. So this is the level that I'm perceiving for gold, okay? Of course, being very conservative over here and being a little bit more aggressive at the daily time frame. I have learned a lot of things last week, and because of what happened from the situation around the globe, me personally also being in a country that is also affected with those kind of stuff that is happening around, I really learned a lot of things about myself and some uncomfortable situations, how to still manage your business even though you're under pressure. So don't expect yourself to be perfect, and most importantly, don't put some pressure on yourself. So it's fine even though you cover maybe 30% sometimes of what you perceive. So I've been going through some psychological challenges, but I think they were all happening for my own sake. And sharing this journey here or with the members on the group really made a significant change or impact on what's going on. So what I mean to say from here is that focus on yourself, really dedicate some time to put in the efforts on understanding those concepts because it will really pay off sometime. And actually, you will look back into the days and years and you will see that yes, it was really worth it. Of course, as long as you're putting in the efforts and really working on yourself. So, thank you for making it that far. I think this is already 31 minutes, so really thank you for making it that far until this moment. Let me know if you need me to expand some explanation on some of the concepts, and I hope you marked your levels already. It's gonna be a great and a big week ahead. Let's go, trade safe. See you in the next update.